Ajay Srivastava is our market master today, Chief Executive Officer at Dimensions Corporate Finance Services. Ajay, great to have you with us here. Thank you very much. You've been cautious, Ajay, for at least the last few interactions. You've been highlighting the virtues of investing in fixed income. I actually, on our show on Friday afternoon, put out a piece just looking at what various debt mutual funds are yielding. You know, 7.5, almost 7.75% kind of returns. Of course, I mean, not post-tax, but what's your view, Ajay? What's your view on the markets from here out? And of course, what we are seeing on the rate side.
See, just to cover up what you said on fixed income, I think for most people who do on a salary side, the best thing is your PF. PF gives you the best returns compared to all the debt mutual funds. So I'm not suggesting debt mutual fund at all. I've been suggesting that you look at your PF, you look at your debentures that are available in the market, look at even government bonds. They give a better yield at this point in time. State government bonds, you can buy from the RBI window directly. You don't need a broker for that. So multiple options. Debt mutual fund, I would put the last or lazy options. If you're a lazy investor, you go there. But the yields are available abundant. And as I said to most salary employees, your provident fund is the best thing. Increase it from your salary. You'll get the best return in your life over the next 10 years. Leave that aside. I think market is telling us, Prashant, one simple thing, that if all of us are still watching TV and working at this part of the year, we haven't done well, just as the market has not done well. So I think we need to focus, as to say, why by December 20th next year or 15th next year, we should not be looking at the screens and looking at the sea. And I think some of your anchors are at this point of time. So that's your target going to be. Number two is, if you got money, spend it on the holiday season. Just spend it, because no matter what you buy at this point of time, you will lose money in the end by the next quarter. So I would suggest to people is either stay away from buying, or if you really need to spend your money, do it the right way, spend it on holidays. Equity is not the place where you're going to be happy in the next year.
Ajay, view of the sea and spend it on holiday. I mean, you sound like a life coach, which is fair enough.
I'm following, Ajay, I'm following some part of that advice. The PF, I'm doing the Optima, Optimum 2.5 lakhs at least is what I'm doing. As of now.
Perfect.
But so 2.5 is the maximum. I think
the
they
maximum.
capped it, right?
I mean, if the interest, or if you contribute more than 2.5, then you have to pay a tax on that.
Yeah.
Prashant, my pocket's not so deep, right? The kids are a little
no. I mean, this used to be
this used to be unlimited.
I mean, huge, right? I mean, but they capped it. I think 2 years back, they capped it. Ajay, the point is, if you're already doing, you said, I mean, lazy versus not, but this is already you're doing. One is doing, I'm assuming, right? I mean, why would you not put money into the PF?
Oh, Prashant, I'm telling you, we have known companies where most employees have an option to go for the PF or not, right? That's a new law, right? And you'll find humongous number of people, youngsters particularly, who say, listen, this is not for me at the end of the day. I want money in the bank, or I want to play in the market. So even very mature people, I see senior management people and middle management I come across in my various companies, the number of people not in the PF or not putting the maximum in the PF is just too high. It's unbelievable, actually. The irrationality of Indian investors is unbelievable, as they stick around with low performing equity in the mutual fund, but refuse to put more. And as Nigel said, 2.5 lakhs is the contribution of the employer, but you can put much more money than that. I think you can put about 5 lakh plus in that and still be an interest-free zone. So total corpus that you can collect in a year, you actually, some of the people don't need to do anything at all. They just focus on this PF, and that's the end of the story for them. So I think, it's just that the irrational exuberance on the equity markets has been so high in this country. And I'll give you an example. The fact that Indian investors still believe that Jet Airways can fly. Can you believe it? That tells you how irrational exuberance in the market. The only guy making money in Jet Airways transaction is the RP. If you watch where the ends, where the whole thing ends, the RP would have taken and the biggest chunk of the money from the table. And the banks would left high and dry, employees will get high and dry, and the resolution professional will be laughing to the bank. And if that exuberance continues in the market, you can imagine what kind of stuff people do buy.
Ajay, in fact, we just briefly discussed this even on Friday, that the safe investments, the VPF, Voluntary Provident Fund, you can do up to 2.5 lakhs. You have PPF of around 1.5 lakhs. And if you have a daughter, then, you do Sukanya Samriddhi. And your 6 lakhs odd safe investments, average of around 7.5% odd. But a lot of our viewers today, Ajay, will be watching in, whoever's not, enjoying a good vacation. They'll be wondering, what do we do on the equities front from here on? What's your sense? I mean, which are those sectors that are still offering value, if at all?
Value means what? Value means that were you able to sell it more than what you bought it at? To me, that is value for a stock. Rest is all immaterial. I may think the great company, but if the market doesn't think so, that value has no meaning. I would still believe, even as we sit in the current year, the only long-term investment I find in this world, and including India, is commodities companies, because there are few, and who are there are monopolies. And if any economy has to grow, if this whole EV thing has to catch up, you will need aluminum, you will need copper. So the basic precept of any equity market is growth. Growth cannot come till we use basic commodities. And these commodity companies, globally, if you look at it, it's amazing, Nigel, that there are 6, 7 companies who control literally the world market, including in India, just 2 or 3 companies control the commodities market. And I would say that only one industry I would like to bet long term and continue to invest is commodities, because everything else, if it has to happen, will start with commodities. Yes, sure, prices cycle will go up and down, LME will go up and down, but with high interest rate, you will not find new companies. You will not find new exploration bids. You will have to live with this kind of stock of mines for the next decade or so. So if you were to ask me in equities, only one long-term bet I can still go for, and I'll still keep investing, is the commodity companies, both India and abroad.
But Ajay, won't a recession in the Western world hurt commodities and the kind of demand?
Of course it will hurt, but if the recession in the West comes, the rest of the market will also go down along with it. So I'm saying, if you need to invest in this market, and I would sincerely believe the commodities is still the place to be, then commodities has to stay firm or go up. Because yes, recession will put it down, but also what it does, recession, is that it will take away new explorations, new sites, new mines will not be explored any longer. And you sit with this stock for a decade. It takes about 5 to 7 or 10 years for new mines to come into operation. Can you imagine this world that we are producing so many EVs? We want to have so many of the alternate power sources. They all need metal at the end of the day. You can't fight away. So recession be notwithstanding, if just the simple power sector transition has to take place from conventional power of coal to non-conventional power sources, which is solar and this thing, they need commodities like aluminum and copper. So recession or no recession, I think you are in for a beautiful ride on these companies. They are deleveraged, they're giving good dividends, they are monopolies, you need the product, no new supply coming in the market. I'm telling you, yes, gyrations will happen, but you can't get better setup for commodities than today.
IT, especially these large cap IT companies, right? If you are willing to tide right through the gyrations that we will see in IT companies over the next 6 months here, 6 months, 9 months, as bad news continues to come in from, the Western world, how is IT as a long-term, bet? If someone is willing to hold on for the next 5 years, is this an attractive time to start accumulating?
IT is a good for India. It's definitely good for India. The problem is that you have to be clear about what stock you're selling. In India, we basically believe the top 2 are the only ones to look at. The rest have been laggards. They do perform sporadically, but they're never given consistent returns. So if you're ready to be IT, is also you got to be stock specific where you want to be, and do you have the ability to keep buying to average it down? We don't know how US market is going, and let me tell you, if the Democrats continue to be in power, that US is going to be in a bigger grind. So I would say, if you were to put in IT, hold this money for some time, keep watching the US market, and if you get a Democratic government again in next year and a half time, you need to exit your IT portfolio, because that's disaster. This is what has happened post-Trump in the US. IT companies are now facing the biggest disaster. If next president also becomes Democrat, you run out of the US market if you have not already run out of it. So to me, IT is not about just the company fundamental. IT is about US political and US economy, because if that's not going to perform, your company is not going to perform. So if you want to invest in IT, I would say be slow, but just wait it out patiently till the next US election. That's a time to commit big money. Otherwise, you'll have these gyrations coming and you'll have a suboptimal performance. Your 20% fall just here. You may have another big fall next year as we go into the US elections for the president in a year and a half time. So wait it out, keep your money parked. If the Republicans win, you go all in the US market, not only IT companies, US market, go all in. If Democrats win, exit IT companies.